Good morning and welcome to the IIF virtual event on the future of money. My name is Conan, Senior Advisor for Digital Finance at the IIF, and I have the pleasure of moderating the discussion today, which was originally to have been a panel at our Global Digital Finance Symposium, but which we've moved to a virtual format this month instead. So thank you very much to all of our speakers for joining us in this format today, and for all of you joining us in the audience. Before we begin, a few logistical notes. I'm sure most of you have become very familiar with the Zoom platform over the past month, but just wanted to remind everyone, reminder to our speakers, the discussion will be on the record, it's being recorded, and press may be in attendance. And for all of our audience on Zoom, we hope that you'll use the Q&A button at the bottom of the screen today. So we'll try and use as many of your questions in the dialogue as possible. You'll find that if you bring your pointer down and hover over the bottom of the screen, you'll see a Q&A function, and use that to submit your questions. So today's topic is the future of money. More than 10 years have passed since the launch of Bitcoin, which demonstrated the power of these new technologies to challenge the fixed constraints that we had in place for money. The past 12 months have seen another flurry of activity as central bank digital currencies, regulatory review, and commercial bank tokens have all been working to enter the market. And a lot of this was an uptick in tempo caused by the Facebook Libra proposal about a year ago, and that's just been refreshed for the 2.0 version as well. So this has been already an area of intense activity over the last decade. And there's been an amazing array of different initiatives, technologies, and we hope that the panel today will be able to give you an update sort of in all of those different areas. We've also seen an acceleration, amplification of these trends with the COVID-19 crisis over the last couple of months. We already had cash-led economies in many markets. Digital commerce was already moving to the fore, and COVID-19 continues to accelerate these trends the way it's accelerating other trends across our economy. So today we're looking at what form money will take in the future, how it will impact things like remittances and payments, how customer expectations are driving these things, and what the roles of central banks, commercial banks will be in this new landscape as money changes with these new technologies that allow it to have new functionality and also really accelerate the possibility for different structures in the marketplace. So it's my pleasure to introduce our expert panel that we have today. And as I said, we took some care to have the full ecosystem we thought really represented on this group today. And I'll run through our speakers first in alphabetical order, and then we'll kick off with some introductions from them. Sonja Davidovic is an economist and a digital expert at the International Monetary Fund. Dan Gorfine is the founder and chief executive officer of Gattaca Horizons. He's also a director of the Digital Dollar Project, and he was the former head of Lab CFTC. Rolle is the governor of the Central Bank of the Bahamas. Whelan is managing director for digital investment and innovation at Santander's investment bank. He's also on the board of Finality, which is managing the utility settlement coin initiative from a number of IIF banks, UBS, Santander, MUFG. So the topic today, the future of money, and as we get ready to move to our first panelist, really wanted you to kick off and start sharing your views on why money is evolving now. What's your institution's role in the ecosystem and your perspective on market drivers and new developments for this future of money. So with that, I'd like to ask Governor Rolle to tell us a little bit about the initiatives that are underway at the Bank of the Bahamas, and why you're an early adopter of this new technology for the next generation of money.
Thank you very much, Conan. Let me congratulate the Institute for having this very timely pilot. In the Bahamas, we've started a payment system modernization initiative in 2012. And working up to this date, we've gone through a series of evolution, with the idea of a digital currency starting to gain traction about 2.5 years ago. In December of 2019, just a few months ago, we launched our digital currency pilot on one of our family islands, the island of Exuma, and we later extended it to the island of Abaco. And the reason why we started a pilot in the way we did was precisely because of the kinds of developmental issues that we're trying to address in the Bahamian context of payment systems modernization. Certainly, the COVID-19 pandemic has brought into sharper focus the need to have digital access to finance and payments. And in the Bahamas, we've learned a lot more about the importance of resilience coming out of a Category 5 hurricane at the end of 2019. In our case, the reality is we are an archipelagic country, and so even though we have relatively good levels of financial access and inclusion by global standards, when you have lowly populated islands with limited access to banking services, or in cases where the physical banking infrastructure has to be scaled back because of cost consideration, financial inclusion becomes a challenge. So for us, really, it is about leveling the landscape for financial inclusion and access throughout the country, and also ensuring that given such a small country, 400,000 is the population, that the economies of scale that sometimes present themselves in terms of the kinds of investment that may take place in the payments ecosystem and other larger economies doesn't easily happen in the Bahamas. There are public goods aspect to what must be done. And so for us, a central bank digital currency under the caption Project Sand Dollar is also about providing that infrastructure that permits the interoperability between all of the digital payment products that may be brought out there. And so our approach is, I should say, to have a retail version of the digital currency. It means that it's going to be available in the hands of everybody in the public, not just the financial institutions. And we start first by building out the legal framework to address financial inclusion issues. We look at how we can broaden the participation of financial institutions in our payment system to non-banks, so we address those issues in legislation. We looked at how we can address financial inclusion and access from the risk-based approach that banks use and financial institutions use to onboard customers, because for us, the risk-based approach also responded to a lot of the correspondent banking and de-risking challenges that developing countries generally experience around payments. So we put all of those frameworks in place and then move forward with the digital currency. The principle for us is that digital cash has to be just like physical cash. And what that challenges us to do is to think about all of the ways in which cash is used in the physical sense and the convenience and the access, and to make certain that we design a digital infrastructure that can provide that type of access. But at the same time, it's private, but it is not anonymous, because we want to make certain that we have a robust system for anti-money laundering, terrorist financing, and all of the other financial integrity related issues. So from that point of view, we put a lot of focus on those types of issues. At the same time, we're intent on making certain that, and the outcome is one where we are complementing our banking services. We provide a platform through which even more banking services can be provided. So it is not intended that central bank digital currencies or the constructs that come up around it would displace the traditional banking services. In some cases, you may have some shift in where the services lie, but the important thing is that they have to be integrated in some complementary way. And we have some technical considerations around how we achieve the integration. Now, the focus, as we are in the midst of a pilot, and we are beginning to see a lot more inquiries about when we can have a more national access to digital currency, we're focused on building out the assurances around the cyber resiliency of our infrastructure, and as well as looking to make certain that our financial institutions who participate in making the digital currency available to the public, that their technology platforms meet whatever security and other standards that we impose. And so much has happened in the last 2 to 3 months that were unrelated to the reasons why we started on this journey, but it has become quite evident that what we're doing is even more relevant in the present context, and particularly whenever you start to think about all of the ways that people have access to payment, financial inclusion sort of brings us back to the center, because then we have to think about those who do not have access to the credit cards or the debit cards or the other platforms, but who may have cash. And so we need to make certain that they also have the opportunity to exercise choice in a credible way, to exercise choice around digital currency. I'll stop there and I'll wait for others.
Thank you, Governor. I think you've introduced a lot of themes that we'll have coming up repeatedly in the conversation today about the public good aspects, the role of banks, the design considerations you had in your platform, and maybe some of the technology questions that supported some of those overall objectives that you had. So next in lineup, I think we'll go to Dan Gorfine to give us a little bit of a background on your perspective in the market and maybe share with the audience some of your background with Lab CFTC, some of your work in digital dollar, and your perspective out of Gattaca now.
Great. No, thanks so much, Conan. It's great to be on with all of you, and thanks for all of our guests who are joining us virtually. Conan, as you noted, I was previously the director of Lab CFTC and the chief innovation officer at the U.S. Commodity Futures Trading Commission. I left last summer to begin a fintech advisory and consulting business, and also had the opportunity to help launch the Digital Dollar Project, along with the former chairman of the CFTC, Chris Giancarlo. But just to step back for a second and answer your question on why is money evolving now, and then how does that relate to the Digital Dollar Project? So let me give a little bit of my own personal experience and context. So during my time at Lab CFTC, we spent a fair amount of time studying and meeting with and learning about a range of tokenization, crypto, and blockchain related projects. And I'll tell you, my big takeaway from that is that we all know that today we can move information halfway around the world with relatively few intermediaries, very little friction, and at very little cost. The reality is that today tokenization allows us to move information about value, and most importantly, about unique ownership of value in also a relatively frictionless way with relatively few intermediaries. And it became increasingly clear to me that that technology is going to impact the movement and the way we transact and transfer a broad range of assets, including financial assets, and that is ultimately going to hit money as well. You mentioned at the outset projects like the Libra project, which was announced last year. There's also the Chinese digital yuan project that's gotten a lot of attention. And I think, quite frankly, what that's done is it's helped stimulate some thinking, especially with the Libra project. You start realizing that if 2 billion people adopt a common platform and a new medium of exchange, that can have a significant impact on economic activity. So with that backdrop and having left the agency, I started spending some time with, again, former Chairman Chris Giancarlo, and we increasingly believed that there was a need to catalyze action within the US to really start thinking about how this technology was going to impact currency, and most importantly, how that was going to impact the US dollar itself. We published an op-ed last fall where we referred to this as a bit of a Sputnik moment, really, again, the need to catalyze real focus on what this will mean for the US, what it will mean for the economy, and whether we have the right planning in place should we decide to tokenize the US dollar. So we started with a call to action. After that op-ed, we got a lot of inbound and a lot of interest in the project, and we realized we needed to go further and really actually catalyze activity. And again, I want to highlight that I think we view this as a real offensive opportunity. It's not something that the U.S. should be exploring in a defensive or reactionary way, but rather as something that can kind of further enhance and future-proof the role of the dollar in the global economy. So a few things about the Digital Dollar Project, which we launched earlier this year in partnership with Accenture, that has a global blockchain team in practice that's working on a number of global CBDC projects. The overall Digital Dollar Project is a nonprofit effort. What we're seeking to do is to create a platform where we can pull together leaders from a broad range and cross-section of stakeholders to really begin thinking about what would it mean to tokenize a central bank liability, namely here the US dollar? What are the design choices and related trade-offs that we need to think through? And how can we start putting pen to paper to really think through those design choices and trade-offs so that we can offer up to the public, to the government, kind of a series of pilots and ways that you might implement or at least test a CBDC in a phased approach. It's important to note that we are not tokenizing the US dollar ourselves. There is no kind of commercialization aspect to this. And we really can't ultimately launch a US CBDC, of course, without the participation of the government and the Fed. But if we're able to do the hard thinking now and help to lay out what some of the considerations and trade-offs are, we think we'll be in a much better place if and when the US government decides to move forward with CBDC pilots or tests. So I'll stop there, and I know we'll have an opportunity to go a little bit deeper into those various elements.
It's a great introduction. And John Whelan, I think we'll move to you next. And Santander has been among the banks that have been working with a lot of different technology companies and initiatives in this space over the years. And you bring a particular technology and background and passion to this effort as well. And you also hold the Santander seat on the Finality utility settlement coin initiative. So I was hoping you could share with us a little bit about why Santander is investing time and attention here and how you see the different nodes developing.
Sure. So thank you very much for the invitation to talk today. It's a topic that I spend all of my time with and have been doing so now for, I think, going on 8 years, related to blockchain, distributed ledger technology, tokenization. And a lot of this actually, for me, really was just inspired by Bitcoin originally, and then later what I would call incremental technologies that added additional functionality, particularly smart contracts platforms and these kinds of things. But since 2016, Banco Santander has been deeply interested in wanting to understand the implications for shared ledger technology in general across a whole range of use cases, whether they're value transfer use cases, payments, collateral management, securities issuance, and secondary markets activities, etc., and including what I would call workflow use cases, like managing steps in a workflow where there are digital signatures that are recorded on shared ledgers, maybe among parties that don't necessarily trust each other 100%, but have to do business together, etc. So from the early days, going back to 2016, we realized early on that creating digital representations of securities is interesting. But what's probably more interesting, or maybe even more foundational, is having a digital representation of cash, because the cash leg is a foundational leg or a fundamental leg in every single transaction that you might get involved in. And while it's quite possible for individual commercial banks to create maybe a digital version of their own commercial bank money or an e-money construct or something like that, if every commercial bank in the world was to do something similar, you end up having fungibility problems, because each commercial bank has different credit characteristics. In theory, the commercial bank money from bank to bank to bank are slightly different than each other because of credit risk characteristics, etc. So it seems to make sense that if you take the assumption that cash is a foundational leg to any transaction and that digital cash might be a useful tool to have, therefore, a foundational level of digital cash would be some form of CBDC, central bank digital currency. And it was actually that realization at Santander that got us involved right from the very beginning, going back to 2016, in this project that became known, the working title, because it was just a working title at the time, was Utility Settlement Coin, USC. And at that time, it was even premature to have discussions with central banks about CBDC, because there wasn't really a term, and we weren't ready yet in the evolution of this discussion to have these conversations. So the idea behind Finality was that maybe a group of banks could get together and build what's called a financial market infrastructure, which is kind of a very highly regulated part of the financial system, much the same way that clearing houses and CSDs and different institutional tools are recognized as financial market infrastructures, and build a utility that would allow a multi-currency clearing and settling system for cash obligations using a digital cash instrument that would have some, but not all, some of the characteristics of central bank money. And that particular project that started as Utility Settlement Coin went through essentially 3 years of research and development from a technology point of view, from a legal and regulatory point of view, from a business model point of view, and ultimately led to 15 financial institutions getting together in May of last year and forming Finality, which is now a real business that is on the path towards building something that gives us a tool that is like but not identical to CBDC for wholesale purposes. And round about the same time, a month later, this, again, a crazy idea from our friends at Facebook called Libra was announced. And that really kind of accelerated the discussion from what was kind of, bank-led and bank-driven, quietly in the shadows, to bringing it to the forefront in the media that, hey, maybe a concept of building new payment rails on this new technology, perhaps in partnership with some or all or one or two of the central banks of the world, might actually be a useful thing. So we're really at the point now where I think we've hit the hockey stick point in terms of dialogue and momentum behind the evolution of money, moving from analog money, which is paper money or coin money, to electronic money, which is what we have already. We have electronic money, but we don't really have digital money. And by digital money, I mean programmable money, where you could program, you can attach behavior to money using these digital tools like smart contracts in a way that has never been done before. And I think myself that the future of money, I'm a true believer. I think that this is the path we're on. I think that digital currency will become a natural part of our lives. We will look at our balance on our screen, and it may be commercial. Your commercial bank account will be there. Maybe you've got a digital wallet from different providers, could be the central bank. At wholesale purposes, we will use digital cash for automatic DVP, delivery versus payment, PVP, payment versus payment for FX purposes, and other things we can't even imagine yet. Perhaps DD, delivery versus delivery, for collateral management and things like that. So I think all of this over the next few to several years is going to be probably, from my point of view, the most exciting space in finance, the confluence of cutting edge finance, cutting edge legal and regulatory, and ultimately cutting edge business models, because ultimately all of this will have to lead to evolved business models that serve the world better and serve businesses and people better than it does today. So that's my pitch.
And your point on programmability, I think that highlights for our audience sort of one of the key differences between previous forms of digital currency that have existed ever since computers and communications were in place. And so I think that that's the key functionality change that is different in this era of new digital money. So with that, our final perspective is a very important one. It's a global perspective. So Sonja Davidovic, if you could share with us sort of the IMF's view and your views. Why is the IMF tracking this as an important development topic? What are some of the trends that you see as you look at developments in China, Libra? Of course, the IMF with the SDR has had a global form of stored value for quite some time. So we're very pleased to have your perspective here as well. Sonja.
Thanks to everyone for attending. I realize it's a time of crisis for everyone, and for an institution like the IMF, we're in firefighting mode, as you can imagine. So trying to help member countries out tackle this crisis situation. In terms of what we have observed, and truly the other panelists have brought it out well, Libra being the proverbial kick in the butt for some central banks, because, and primarily, yes, there was a market gap that Facebook was able to tap into. And yes, it was a wake-up call, but I think the major concern was the the monetary sovereignty. Being able to influence and control monetary policy would become increasingly difficult with a digital asset that is would have the strong network effect of a Libra. So we've seen a number of pilots that have been conducted. A lot of them completed successfully. Some of them are about to start. Everyone's heard of Sweden and China, of course, but to a lesser extent, people actually know that Uruguay was the first central bank that successfully completed a pilot project, and Ecuador as well, but less successfully. And then we have, of course, the ECCU and the Bahamas, very interesting use cases of financial inclusion, whereas other countries are, like Sweden, for example, are looking to stem the dwindling use of cash. So what is our role in all of this? We're basically trying to help central banks out navigate these uncharted waters, because as you can imagine, a central bank does not have the luxury of failing and repeating the process again. There's a huge reputational risk at stake, and we have to be in a position to guide or advise central banks on how to best navigate in these, this new territory, basically. And a lot of times the most important, if not the key question is like, what is the actual objective behind issuing a central bank digital currency? Is it really necessary? Or is an upgrade, modernization of the underlying payment system enough for a fast payment system? What is it that the central bank is actually trying to tackle? Because it shouldn't be really about a fear of missing out in terms of like, oh, I have to act now because all these central banks are conducting pilots and I have not really done anything. It shouldn't be really about that. It also shouldn't be about a specific technological solution. There's, has been a huge hype out there about blockchain. And yes, for sure, it brings some aspects with it that are very appealing, like the programmability that John just mentioned earlier. But at the same time, it's, it still has a lot of issues that have to be thoroughly tested out and examined before you can make a jump to a technological solution. So these are the kind of things, and among many others, that we're trying to research a little deeper for our member countries so that we can give informed advice on what to do, ask those fundamental questions. And even when designing a pilot, right? Like it's a good way to test a specific design element out in a controlled environment. But important also there not to like throw the whole kitchen sink into a pilot program, but rather test different aspects of the CBDC. Some pilot might test out financial integrity, compliance. Another pilot might test out cybersecurity resilience. And a third pilot might test specific KPIs relating to performance and such. Of course, this comes with specific costs attached, and we're cognizant of that. But there's definitely a need to approach this topic cautiously and in a thorough, a very balanced manner, as opposed to jumping too quickly on solutions, because truly the reputational risk is too high. And I think that according to the latest survey that the Economist and CoinDesk conducted, it was very interesting to see that citizens still have the highest trust in a currency issued by their central bank, right? So I think that trust really demands that central banks are very thorough in their due diligence process before even embarking on a CBDC issuance.
Thank you, Sonja. I think that issue of trust is one that we see cutting across the entire digital finance space as a central element. It sounds deceptively simple, but when you boil a lot of things down, that's what we come to. So for the next section, I think we're going to also pick up on your theme of sort of objectives and mapping those with technology. But before we do that, just a little reminder, I see a couple of questions coming in through our Q&A channel, and a reminder to the audience, if you hover over the bottom of your Zoom window, you'll see a Q&A function, and you can submit questions for the panel there. So for the next section, I thought we'd dive into that. What are we talking about? There is such an array of different technology solutions and design considerations that fly under the single banners of digital currency, or even central bank digital currency, CBDC. And I think one of the key messages from the IIF is that these details matter. A lot of these details can determine sort of what future roles and responsibilities are in the ecosystem, what the value chain of financial intermediation looks like, basically who's doing what. And so John, I thought, John Whelan, if we might be able to lead off with you, giving a little snapshot of the different technology and design considerations that we see, maybe both on the CBDC side as well as the commercial bank tokens.
Sure. So one of the things that is really important is to make sure that we're all talking about the same thing. People throw around the term central bank digital currency, commercial bank currency, cash, reserves, accounts. And, being an engineer, I like to make sure that before we do any work, that we are actually absolutely precision oriented about what we're talking about. So there are two forms of money in the world. There's commercial bank money and central bank money. Commercial bank money is the money in your bank account. Central bank money, there are two forms of that. One of the forms that we're all familiar with is cash and coin. And cash and coin is retail facing. You and I can use that in our day-to-day lives. The other form of central bank money, of course, is reserves. And only banks today can have reserve accounts at the central bank. So when we get into, potential design parameters to choose from, I'm going to list a bunch and I'm going to tell you which ones I think are the most important, even though they're all important. So I think, design parameter number one is wholesale versus retail. If you're designing a central bank digital currency, is it going to be for use among wholesale participants, financial institutions, banks, non-bank financial institutions, or can retail users and small businesses use it too? Fair question. Second question would be, would that CBDC be account-based versus token-based? Now, a digital token is analogous to the bearer asset, the cash in your hand, where in this case, a digital token is actually controlled by a cryptographic key, which is held by a person or perhaps somewhere else on behalf of that person at a custodian or something like that. So that's another design question that you could have, account-based versus token-based. The degree of programmability that you might offer is also a question. You could perfectly design a central bank digital currency to be non-programmable. You could design a CBDC to have a little bit of programmability, if then else, or to be fully programmable with a Turing complete smart contract language. There are a host of other questions that you could ask as well. The degree of transaction privacy that a CBDC might offer. Cash is anonymous. Once you've taken cash out of the bank, what happens to that cash between businesses or people is essentially completely opaque. Nobody can, unless it's revealed in some manner, it's an anonymous transaction. Bitcoin is not fully anonymous, it's pseudo-anonymous. And there are different levels of anonymity or privacy or confidentiality. They're all different things that could be built into a CBDC system. Another question would be, should central bank digital currency be interest-bearing or non-interest-bearing? Cash is a non-interest-bearing instrument. But that does not mean that CBDC might not have to be a non-interest-bearing instrument, and indeed it could bear interest in ways that commercial bank money or indeed central bank reserves do not. Interesting choice to make. Then there's the question of what technology you might use. You can use DLT potentially, or you can use existing technology. Should a CBDC be allowed to cross-border? In other words, if I'm in the European Union, should I be allowed to send a euro from inside the European Union to outside the European Union? Fair question, and probably fully controllable using different know your customer and AML type measures. There's a host of questions. Personally, I think the biggest decision that should be made in a CBDC is whether it's retail facing or not. And that leads to a second design question is, should that retail facing CBDC instrument, if it is retail facing, should it be direct from the central bank to the user, or should it be a two-step process using perhaps the existing commercial bank financial infrastructure as the distribution mechanism, but also to handle account-based activities and perform KYC and AML and monitoring and screening as we do already, because central banks are really set up. The customers of central banks today are really the commercial banks themselves. Could talk all day about these topics. Lots of questions, I'm sure.
Well, that was a very good comprehensive list of the key issues that folks are faced with. When you hear the buzzword design considerations, those are the considerations that we're interested in tracking. Many are under consideration today. You see the Bank of England's consultation paper posing many of these questions and the trade-offs between different decisions and the potential impact they could have on intermediary banks. So with that, I think we'll go to Sonja next, and then after that to Governor Rolle. But Sonja, maybe you heard a list of those technologies and those design considerations. You made the point that these technology decisions matter, and was wondering if you could share some thoughts on the current initiatives and consultations underway as you see the public sector wrestling with a lot of these decisions.
Sure. I mean, as John mentioned earlier, there's clearly a distinction between wholesale and retail CBDC. So on the wholesale side, most of us will have heard about Jasper Ubin and Jasper Ubin and the Style project in the ECB and the Bank of Japan. And then most recently, the UAE, Saudi Arabia with their project Aber, and the Bank of Hong Kong and the Bank of Thailand who've been testing out wholesale CBDC. But I think on the retail side, we've definitely seen a more activity than on the wholesale side, which doesn't mean that one matters more than the other, but I think it was just a natural response to the developments that have occurred in that particular space, meaning private payment system providers and stable coins and other digital assets that are sort of entering the retail space. So I've mentioned a few earlier, and I think just to add to what John said about the design principles, I think what is really important is to build in specific design flexibility into a CBDC in any product or service, really. That is very important because, for example, the decision whether to issue an interest-bearing or non-interest-bearing CBDC, that option should be there. It should be built into the product, right? So even if the decision is not to use it from the get-go, maybe at some point the Riksbank, for example, decides, oh yes, it would be interesting to actually enable this and see and test it out further, right? But without that flexibility, the product is could potentially face limitations in the future as there are regulatory changes, as there are changes in cybersecurity and other related or changes in user demands. So the product won't be able to keep up with those required changes if there's not sufficient flexibility built into the design. And I think the Riksbank is a good example of how that flexibility has been built into the product from the very get-go. A number of other central banks are looking at offline capabilities, meaning being able to transact or use CBDC up to a certain amount in an offline modus. So we have not yet seen specifics on that, but certainly something that is interesting in instances where there's power outages for the Bahamas or other Caribbean and Pacific islands, potentially a game changer. And I think both the Riksbank and the PBOC are exploring that feature further. We have to see how that will work in practice to, in terms of avoiding a double spend problem, synchronizing with the central ledger, and, the aspect of identification compliance with identity verification. So those are the kind of design features that we still need to take a closer look at. But certainly, just like we are concerned with giving the best possible and most informed guidance to our member countries, so are other central banks and international financial institutions like the BIS and the BOE. I think the BOE papers is great in showcasing the potential that a platform brings along. I'm a big believer in this kind of approach because I do think that the future of money will bring an entire ecosystem. So I don't think we will just be reduced to a single digital asset or a single digital currency, but rather we will see ecosystems evolve, right? And so I think setting that ecosystem up is something that will take a couple of years possibly. I mean, it's not an easy undertaking because it requires that systems interoperate, that there is a common set of standards that everyone agrees on, so that this can really be something that is revolutionizes how we think about digital finance products and services, right? Because I think the trend is to integrate the technology stack as much as possible so that we can harness the real potential of these ecosystems. So in that regard, I think the Bank of England paper is interesting because it lays sort of the foundational piece for that ecosystem.
Yes, it's a great paper, and we look forward to, in a future upcoming webinar, the IIF will be diving into that with a presentation from Bank of England on their paper as well. So with that, Governor Rolle, I'd like to move to you as somebody who's responsible for leading an institution that had to sort through a lot of these decisions and is in the middle of the process. What are some of the things that you took into account? Is this one of our messages, I think, is that this is not an easy out-of-the-box answer. So what are some of the things that you found as you've worked through this as governor of the Bank of Bahamas?
One of the terms that I've used a lot with my colleagues in the project is trying to distinguish between the plain vanilla product versus the bells and the whistles. And the distinction that I'm trying to draw is that central banks have to decide what is it fundamentally that we are providing for the payment system and the infrastructure, and what do we leave to the private sector and the financial institutions by way of innovations in terms of how they use the product. At the end of the process, we are providing an infrastructure for payments. And the simplest way, it's messaging and settlements using the central bank as a focal point. But for us, so a lot of the ways in which the digital currency is used, the Central Bank of the Bahamas will not pay interest on digital money holdings. But the financial institutions innovate and develop products where they use digital money in ways where they can decide to pay interest, that is fine. So it's not intended that the central bank will take on that responsibility, because we don't want to have to manage the resources allocation issues around intermediation of financial savings in the economy. We do not see that as our role. It's difficult to try to make it the role. For us, the wholesale versus retail, we settled on retail because we wanted to deal with the individuals who were at the end of this payment process at the retail level. And it is a two-step process in the sense that the accounts for digital monies are with the financial institutions. They can acquire digital money from the central bank, or the design intention is that they would acquire from us on a wholesale basis and then distribute to the general public. So certainly we don't want to be operating customer service kiosks dealing with all of the individual public queries. So certainly that, from that point of view, plus they address the AML and the KYC issues around the financial integrity issues, but we also make certain that privacy, while it is preserved, doesn't trump the anonymity that could enter into the picture if we're concerned about financial integrity and monitoring what's going on. So anonymity is not a part of the design. Privacy is, and the financial institutions, they will be subject to regulations and supervision around how they maintain their KYC and anti-money laundering system. So that's very important. We do not leave at the retail level an open-ended situation in terms of how much of the digital currency the average individual can hold, even though we intend to distinguish between commercial entities versus yourself and myself as individual holders in terms of the amount of currency that you might be allowed to hold. And the intention there is that if you're coming into larger quantities of money beyond those, the mechanism should allow you to transfer those into commercial bank deposits or other types of deposits. So that flow through is very important for participants in the system. We are not, also in the case of the Bahamas, anticipating any sort of cross-border access to digital currency, any different from the way we regulate access cross-border to our other forms of domestic money. And in this case, the commercial banks are the authorized dealers in foreign exchange in the Bahamas. So if you have digital money and you're trying to get access to use of it for international payments and transactions, you're still going to have to go through the conduit of an authorized financial institution to acquire the international currency that you're using for payment. So the intention is not to have that cross-border access directly in the digital currency. And that is not an access that is available in the current versions of money that circulate in the Bahamas either. I'll stop right there.
Well, that's great. The role of the commercial banks in your sector and your design, I think, is important. There's a question from the audience, and it's a theme that was central in the Bank of England paper as well, and that is the potential for CBDC to disintermediate the commercial banking sector. Particularly during a period of crisis, there could be a flash run or a shift to the CBDC, and so I think that that's one of the considerations that it sounds like you've kept in mind, and clearly the Bank of England is thinking through as they weigh the benefits and the potential disruption. I think that's a theme that we'll get to in a minute, is some of those tensions that are inherent there.
I may say on this point, we might get a bit distracted and focus on disintermediation as an outcome of CBDCs, but it's not so much the financial disintermediation that central banks have to become fixated on. The bottom line is money moves faster now. Money moves at the speed of light. And that is the reality that a lot of our payment system modernization are bringing about. So the stability of financial institutions still has to have a heightened focus, notwithstanding the use of CBDC or other instruments. If we're having real-time settlement of payments and InstaPay, etc., cash can swiftly move from one financial institution to the next and still leave those stability issues at the forefront. So we should not be too quick to think that the CBDC in this instance is suddenly presenting a new challenge around financial stability. It is a reality from the modernization of the payments infrastructure.
Yes, I see a lot of nodding heads in our panel, so if we were in a live format, I think some more voices might have jumped in on that. But Dan, we thought that you might pick up some of these themes as well in your comments.
Sure, no, happy to. I mean, this has been excellent. And John, I have to say, I think that was the best summary of some of the design choices and related trade-offs that I've heard. So maybe we can pull that 3-minute clip and use that as a tutorial for people. But to come to how we're thinking about this from a digital dollar project perspective, I mean, first thing is to note that we're trying to keep as open a mind as possible on a range of different design choices and consideration of the trade-offs. To Sonja's point, I mean, this is too important. And when you start talking about tokenizing the US dollar, this is too important to rush. And you want to make sure that you're being very thoughtful and considering kind of all of the different challenges that could occur with implementation. But with that being said, we do have a champion model in mind. And there are a couple of key elements of that champion model. Of course, we'll consider challenger approaches as well, but there are a few things where we do have a high degree of conviction, at least with respect to the project. The first is that what we're exploring and advocating for is actual tokenization of central bank liabilities. So that's as distinct to the idea of an account-based system. We are talking about actually tokenizing the US dollar. We think that provides maximum flexibility. And a related point, just to underscore and make sure people recognize the distinction between tokenizing commercial bank money, which is what a lot of the private stablecoin projects have been seeking to do, versus tokenizing a central bank liability. They're not necessarily antithetical, but I think it's an important distinction in terms of what we're talking about. Second, we are not looking to disintermediate the two-tier banking system. And I think as the governor just explained as well, there is certainly a role to play in terms of how individuals or institutions would be able to access digitized money through a regulated bank or payment intermediary. Our view is that these types of institutions play a really important role in our economy. They play an important role from a KYC AML perspective. So to completely seek to disintermediate them and go direct to the Fed would open up an additional major set of challenges and considerations that would not be prudent to pursue it, at least at this stage. That being said, and I want to tie this a little bit to the current crisis, there's been a lot of focus on how can we deploy emergency funding and relief, more rapidly. There were even some legislative proposals recently that talked about a so-called digital dollar. My understanding is more of those were largely electronic or accounts-based systems. I think from our perspective at the Digital Dollar Project, there may be a role for conversations as to how government backstops or programs can help fill gaps if they're not being properly served by the existing kind of payment intermediaries and banking system we have in terms of how you deploy digital currencies, but that should not be the backbone of the system. It should rather be something that you're having a conversation about backstops. Instead, I think what would be really interesting is to think more about how the idea of digital wallets, because at the end of the day, when you dispense a tokenized dollar, there needs to be a digital wallet that's receiving that money or holding that money. If we think about how, from an economic and a regulatory perspective, we make the maintenance and the servicing of digital wallets more economically viable, I think that could promote access and inclusion, which is one of the objectives that many of us are focused on. Another, factor or element that we've given a lot of thought to is the actual payment rails. I mean, there's a distinction between tokenizing the dollar and then what types of rails does it actually run on. Our view is that the best system or the champion model would likely be DLT based or inspired. A lot to think through there, however. Some of the keys in our mind is to prevent an overly centralized system. We think that's important on two fronts, both from a privacy and a resiliency perspective. One of the things that you've seen, if you look at how private payments models have evolved in recent history, we have a lot of commercial enterprises that basically maintain one massive central database. That can be very efficient from a payments perspective, but it raises real questions about privacy and resiliency when you have all of that information contained within one massive centralized database. So we would seek to avoid that type of a scenario. Ultimately, from our goal in exploring CBDC, what we're going to do is put together proposals for a range of pilots. And we talked a bit about retail, wholesale, international. These are all different use cases or applications. And quite frankly, we can talk a lot about this, but until we start, seeing the rubber hit the road and actually testing these various use cases with pilots, it'll be very difficult to know exactly what benefits, what challenges, and what risks exist when you talk about retail-facing CBDC, wholesale application, or international in the remittances context. So using and leveraging this advisory board that we've pulled together of leaders across stakeholders at the project will propose how you might go forward with pilots so we can pressure test these ideas. Ultimately, this needs to be done right. It needs to be done thoughtfully and deliberately, not during a crisis. We think trying to implement something like this, lock, stock, and barrel would be overly difficult and very dangerous actually in the midst of a crisis. But this should be a catalyst. I mean, I think we're all seeing the value of digital infrastructure, and now would be the time to go beyond the conversations. I think there's a lot of good literature out there. There's some good research, but let's actually move forward now to some pilot phases.
And that's great. Having the U.S. public sector sort of continue to keep pace with global developments is a worthy objective. I think for the next section, maybe starting with Sonja and John Whelan, we've heard, and there are a lot of questions from the audience that get to these tension points that you have, and I think we've sort of talked around a few of them, but the tensions between the view of the public good aspect of these new technologies and sort of updating a central bank cash for the customers, where digital money at the retail level has really been the preserve of payments companies and our banks. We have these tensions between the roles of who's performing AML and KYC and onboarding in the system versus what the economic design in an updated payment network is. So Sonja, maybe if you could start off this discussion of some of the tensions, and we have a few minutes here to power through. So speed round, Sonja, Dan,
Okay.
and others, raise your hand if you're ready to come in.
Sounds good. I'll try to be as quick as possible and summarize mainly where the tension is coming from. So for sure, the issuance of the CBDC will be, as it's a central bank liability and its legal tender, very important to keep in mind. The tension will be between guarding that monetary sovereignty of a central bank to conduct monetary policy versus large payment system providers or digital assets, digital currency that might infringe on that monetary sovereignty. I think that's an important point to keep in mind, as monetary policy transmission is and the instruments that the central bank has at their disposal are important to achieve certain economic outcomes. And in a crisis like this one, without that lever, it will be very difficult to achieve macroeconomic outcomes. And if there's any network effects that infringe on that potential to conduct monetary policy, it becomes very difficult. The other tension, and I don't necessarily see that only as a tension, is that who's in charge of the distribution, right? And then there's the payment system layer. I think that the strongest use case is the one where banks or financial service providers are inadequately fulfilling their transmission function, right? Be it that they're not able to, or it's not commercially viable for them to service rural populations or populations in like outer islands very far away. The central bank can step in and ensure that everyone is covered, right? So, and I think that's also important to keep in mind. It doesn't necessarily have to be one versus the other. It could be a complementary approach where the central bank is saying, okay, this is not a commercially viable endeavor, or the banks are just not, able to extend their services and products to do a certain segment of the population. So the central bank can kind of complement that effort. And then finally, I wanted to just say that the issue of capital outflows is a major one, given that, as John Rolle said earlier, like you can move money at lightning speeds, right? Like if you have the right payment system, a modern and fast payment system in place. So imagine how like capital outflows are a massive issue right now for emerging and developing economies, as we see in the crisis. And so that capital outflow will be further exacerbated if those funds will be able to move digitally. So that's also something that is very important that people maybe don't really think through, but something important as countries are trying to shield themselves from like the adverse impacts of, crisis, external shocks and crisis situations. Like countries have capital controls in place for a reason, right? Because it's majorly disruptive to an economy when capital flows out of their financial markets within a heartbeat. So those are the kind of like points that really need to be examined to a point where all the stakeholders feel comfortable enough, right? Including the end user, right? And so when we think about this end product in the retail space that the end user will have to use, it needs to be useful enough so that they will adopt the central bank digital currency, because otherwise it's a wasted effort.
And John, as you wrap up our final answer here, there have been a number of questions with a single thread of kind of what does this landscape look like in the future? We're hearing about CBDCs. Are there synthetic currencies that could ride alongside? You see Libra in their 2.0 proposal proposing a Libra dollar and a Libra pound. So do you think that there's a proliferation of instruments? Do you think there's a consolidation on those trusted central bank instruments? And how do these things work if we've got that landscape? So I know it's a tough order, but if you have a 60-second answer to that one, the audience would be interested.
Sure. I'll give you the short answer. The technology allows anything to be built, so we can build anything we want. So it's up to the regulators to decide what do they allow to be built. We can have CBDCs that are direct, two-step. We can have synthetic CBDCs. We could have a CDBC that allows disintermediation of its own commercial banking system in its jurisdiction. That can be controlled by capping the amount of CBDC and how conversions might happen between commercial bank money, CBDC, central bank money, and things like that. Again, we can do anything we want. The question is, how do we design it? I actually think the most important aspect of all of this is cash is not programmable. Programmable money is the revolution here. Just replacing cash with a digital form of cash, from my point of view, is actually not that interesting. Add programmability as an engineer, now I get interested.
And a quick example of what that programmability is, I think that's another question that the audience has had frequently this morning, is what do you mean when you say programmability?
So programmability. In the world, I can give this cash to anybody. Programmable money means that maybe I could only give my cash to my children, or maybe I could only give cash in certain transactions, or maybe this cash could be used to automatically escrow for a transaction that's important, like a real estate transaction. So the possibility of programmability means we can reduce intermediaries, perhaps taking rent seekers, which by the way also include payment service providers, financial market infrastructure, commercial banks, etc., in a financial system, and making the financial system simpler and fairer for all.
And a quick note in programmability, I think when you think about a world where digital IP rights are flowing across borders and 3D printers and other new means of manufacture and production come in, I think that that starts to hint to why this programmability element might be important. As you mentioned, it's all about what's allowed to happen. And there are debates and a lot of work going on around the world right now. We at the IIF are engaged in much of it. As I said, we'll have stay tuned, and coming up on May 11th, we'll have the Bank of England on a webinar talking about their recent proposal. We have been tracking and staying very engaged with the Financial Stability Board's work out of Basel and the G20 efforts looking at stable coins. The Libra 2.0 paper we've shared with our members, our initial thoughts on that in a quick paper, and look forward to staying engaged in those developments. Everybody is watching preparations crank up in China as the People's Bank of China prepares to maybe launch one of the more major versions of a CBDC in the coming weeks. And so this will continue to be an active space, as many of those questions and a lot of the different design considerations that we talked through today. So I want to thank very much our panelists for taking the time to join us this morning and share the important spectrum of considerations and perspectives in the marketplace that we have. And as I mentioned, this is the first of our IIF Digital Finance webinars this spring. We'll have a busy schedule coming up in the coming weeks. Next Tuesday on April 28th at noon, we'll have a webinar on the Digital Trust Initiative, which is a digital identity effort that Banco Santander, the OpenID Foundation, SWIFT, and many others are looking at. This is an important development in digital identity, which we think is central for our members to track. We will have the same group repeating Wednesday morning for our Asia members for a more convenient time there. Later in May, we'll also have webinars with DG FISMA talking about some of their digital technology initiatives in payments and innovation. We'll also be looking at the impacts of COVID as an amplifier and accelerant in a lot of the trends that we've seen in digital finance. And we'll take an update on quantum computing and some standards there. So thank you very much for joining us on the IIF platform today. And we look forward to bringing our content to you through this channel throughout the spring and summer months. Thank you.